On Business Incorporated today, Egypt's central bank issues new measures to regulate import operations. South Africa's annual consumer price index dropped slightly to 7.6% in August. And Tanzania abolishes transactional charges on bank to mobile money transfers. Good afternoon. Welcome to Business Incorporated today. I'm Ini John Mekwa. Let's start with our trading numbers in Africa, as we would normally do. And we see that the NGX has sustained that mild recovery that it's recorded yesterday. It gained 0.02%. At intraday, there you have the numbers. In South Africa, it's on the flip side. It's negative at intraday, 0.48%. But I mean, still looking good at 66,283.99 points, and flipping over to other parts of the continent in North Africa, to be precise. We see Egypt trading positive also at intraday, 0.14%, and Kenya is also doing very, very good, or close to very, very good yesterday, 1.44% at 134.96 points. We move from there to the Middle East, and what we see in the Middle East is that it's all negative. Major markets that we track, all negative at intraday. Abu Dhabi was trading 1.19% down at intraday at 3,456.31. Dubai also in that line, the bearish sentiment we see there at 10,116.54. And in other parts of that region, we have Saudi Arabia also in the red, 0.63%, and Qatar also almost 1% down at 0.96%. All right, let's move on now and go to Asia. What's going on there is that shares in Asia Pacific traded lower today following Wall Street's negative lead ahead of the Federal Reserve's expected rate hike. The Nikkei 225 in Japan dropped 1.36%. Hong Kong's Hang Seng Index fell 1.79% in the final hour of trade, while in mainland China, the Shanghai Composite lost 0.17%. Elsewhere in the region, South Korea's Kospi declined 0.87%, while in Australia, the S&P AX 200 slipped 1.56%. And then we have in the United States, the features for today are slightly up as traders look ahead to that interest rate hike we've been talking about for some days now. Still waiting that Dow Jones Industrial Average Futures gain 0.27%. There you have the numbers. S&P 500 also gains 0.24%, and NASDAQ also positive, even though slightly. But we have Maria Bird now. Maria Bird. Okay, we'll just skip that and head straight to London, where Juliana is always standing by to give us updates on what's going on in the UK. Hi, Juliana. Good afternoon. Looks like relief for businesses. At least we hear the government now has a package, and perhaps they will also benefit from what you have been enjoying, or what you're supposed to be enjoying, putting a cap on energy costs.
Yeah, that's right. Good afternoon, Ini. Well, we're not enjoying it just yet. That 2-year energy price cap freeze doesn't kick in until the 1st of October, and it's £2,500. And if you think that a year ago it was about £1,000, it's still very expensive to heat your home. But there has been an announcement by the Business and Energy Secretary, Jacob Rees-Mogg, early this morning, stating that the energy price plan that was unveiled by Liz Truss a couple of weeks ago will be now extended to non-domestic institutions. So these are businesses, these are public buildings, these are schools. So between October the 1st and for 6 months, their energy bills are going to be halved. And what the British government are going to do is any shortfall that energy suppliers have, they are going to top it up. And now, it is expensive. We know that Liz Truss's plans are thought to cost the taxpayer about £150 billion. We're yet to hear from the Office for Budget Responsibility on what those costs are, but that's the estimate. And for businesses, considering they didn't even have a cap in the first place, we're expecting it to cost so much more. We'll have details, we believe, on Friday when Kwasi Kwarteng, the Chancellor of the Exchequer, unveils that highly anticipated mini budget, because, of course, we are going through a cost of living crisis. People are on the edge, and businesses in this country have been on the edge, which is why they've been asking for some support. I think widely, business officials, business CEOs, they have accepted it, but it just doesn't go far enough. It's like the fact that it has an expiry date of 6 months has left people in bad taste, but it does feel as if the government have, thrown a blanket over businesses for this winter as we come into that really crucial Christmas period, which is supposed to be the period that retailers and businesses can really kind of soak back some of that money. So we do hope that this new plan will be able to enable them to keep their lights on so they don't go into redundancy. But we still just have to wait and see, because for some businesses it's just too little too late. But I think more details will be emerged on Friday.
Yeah, well, we'll wait for those details and see which direction it goes. And then how's the market looking this afternoon?
Yeah, pretty bright. As you were saying, everybody is waiting to see what the interest rate decision is going to be from the US Federal Reserve. That's kind of dictating how other central banks across the world are coping with high inflation, particularly here in the UK, which, of course, is much higher than any other comparable economy. And then, of course, there's that news from Jacob Rees-Mogg that's lifted investor sentiment as businesses won't be shutting down anytime soon. The FTSE All-Share is up at intraday by 0.67%. The FTSE 100 up too by 0.73%. And the FTSE 250, that's up by 0.44%. In the currencies market, the British pound is currently trading down against the US dollar by 0.30%, though it's trading up against the euro by 0.16%. And the British pound at intraday is trading down against the Japanese yen by 0.10%. In
All right, Juliana, thank you so much for that. We'll talk to you tomorrow. God's grace. All right, we now have Maria ready to give us a recap of how the markets closed yesterday in the United States. After all, the world is waiting to see what the Federal Reserve decision would be in a couple of hours. But Maria gives us a recap of yesterday's markets.
The U.S. stock market took a plunge on Tuesday, opening in the red and closing in the red. The Dow Jones was down by 1.01% down. The S&P 500 down by negative 1.12% down. And the heavy tech NASDAQ was down by 0.95%. Investors are watching to see what will happen on Wednesday, as there's great anticipation that the Federal Reserve will increase interest rates again. It is expected by the end of 2022, interest rates could increase by 4%. This is definitely going to put a damper on the U.S. stock market, but investors are hopeful that inflation will decrease without major impacts to the U.S. economy and specifically the U.S. marketplace.
All right, so let's see what's happening in Europe. There we see that Germany has announced it will nationalize one of its largest gas importer, Uniper, as the firm struggles in the wake of Russian moves to slash gas deliveries to the continent. Berlin says it will buy 99% of shares and add a further cash injection of 8 billion euros. Well, I wonder where all the funding is coming from. But Stephen Beardsley joins us now to give us the details. Hi, Stephen. Good afternoon. What does Berlin believe a buyout is necessary at this time in the midst of all that has happened?
The German government had already said that it considers Uniper to be too big to fail, and that they were worried about the ramifications of an insolvency downstream for regional utility markets that rely on that gas. The problem is that Uniper was or is well, I should say was the biggest importer of Russian gas deliveries, which then all but stopped beginning in mid-June. That's when Russia purposefully curtailed a lot of those deliveries to the European continent. Of course, Uniper still had obligations downstream, so it had to get that gas elsewhere, and that meant that it turned to the far more expensive spot market in Europe, where prices have ballooned because of this war, but it could not pass those costs along to its downstream customers. So Germany had already promised to take a 30% stake in the company, and it had provided as much as 19 billion euros in credit lines to Uniper. Much of that already used up, and it's very clear that gas prices will only stay high, if not get more expensive in the coming months. And there were no other alternatives in terms of from the current majority owner of Uniper, a Finnish state-owned energy company, had already said that it was not going to provide any cash boosts, and that's why Berlin felt that it had to step in this case.
So what does this mean for households?
Well, this nationalization is definitely going to fuel a debate that we're seeing right now about the additional costs that inline consumers, that is households and businesses here in Germany, will have to pay for these extra costs of acquiring gas. There's a gas surcharge that's scheduled to go in place on October 1st, and it's calculated by an additional cost essentially on the kilowatt hour of gas usage, and it's meant to help allay those costs. There's been a lot of criticism about that since many customers are already seeing higher costs from their providers as it is. Now that this company has been nationalized, and potentially two more could become nationalized, there are two other smaller companies that are likely targets because they've also been fed credit lines in recent weeks and have used up those credit lines or come close to using them up. The question is really, should there be a surcharge that German households and businesses are paying to nationalized companies? So expect to see that heat up in the coming weeks. And again, the bigger question here, the bigger picture is really how much of the bill are inline customers going to foot, and how much is going to be spread across taxpayers as a whole, because these are, again, nationalized companies, or I should say Uniper right now will be a nationalized company once this deal is done.
I wonder how the markets are reacting to all of this.
Well, in Germany, we've seen that Uniper has crashed, as one might expect it, falling close to 20% at the beginning. We've also seen that at the outset, major markets, major indexes in Germany and Paris, the DAX and the CAC 40 respectively, both falling close to 1%. There are two worries driving markets today. One is the announcement by Russian President Vladimir Putin that there's going to be a partial mobilization of troops there. So that is an escalation. Seen as an escalation here. That's going to play a depressing, sort of a downward momentum on the markets, I should say. And then another concern is what's going to happen with two central bank decisions today, the Federal Reserve in the U.S. and the Bank of England, both looking to raise their benchmark rates. The question will be how much. It's expected to be 75 basis points. But of course, investors are going to wait and see, because that will play out on business profits. That is the concern.
Yeah, well, certainly a major concern for a lot of people. Stephen, thank you. All right, now, let's take a break. When we come back, we will discuss Africa, finance, and some other stories on the continent. This is Business Incorporated on Channels Television.
Is camera 3 my camera?
You're welcome back. You're still watching Business Incorporated here on Channels Television. And just before we head to that conversation, which we'll be looking at finance in Africa. Let's see what's going on in Egypt. The Central Bank of Egypt has issued a number of new controls and decisions to regulate important import operations and cash deposits in foreign currency. This was made known by the Deputy Governor of the CBE, and in a meeting with foreign trade officials in the banks to answer their inquiries. And most important among the decisions include accepting the proceeds of cash deposits of companies in foreign currencies resulting from export operations with a number of countries, including Libya, Syria, Sudan, Iraq, Yemen, and using them in implementation of import operations, as well as using the balances of parent companies in foreign currencies in local banks. And then in Tanzania, the government has announced plans to abolish the charge for transferring funds from banks to mobile networks. This will also include exempting transaction charges on cash issuance through banking agencies and ATMs for transactions worth not more than 30,000 shillings and reducing the cost of transactions by 10% to 50%, depending on the transaction group. The decision was announced by the Minister of Finance in Parliament, who earlier issued a government statement on citizens' complaints about ongoing charges in the country. Now, talking about finance on the continent, we have joining us here in the studio Vumile Msweli, Chief Executive Officer of Headsley Consulting. And she's here to tell, when we talk about finance on the continent, how sustainable, how educated Africans when it comes to finance. Hi, Msweli, thank you so much for joining us.
Thank you so much for having me.
All right, coming all the way from South Africa, good to have you here. So let's start by finding out, from your work, you deal a whole lot with Africans, especially in Sub-Saharan Africa, Kenya, Nigeria, and all of that. Financial enlightenment, education, how permeated is it among Africans?
I think it's rather limited. In essence, what we find is the majority of Africans are literally living day to day, right? We get daily wages or weekly wages, and we often focus on how can I start spending just to survive the day, let alone start to think a little bit more strategically as to how do I start generating, creating wealth, not only for myself, but for future generations. So I think if we look at, some of the first world countries versus where we are as a continent, there's a lot of development that's required for us, and I really think we need to start being a little bit more intentional about how we look at our finances.
But how do you do that when you have to survive today before you think about the future? You know what I'm saying?
They often say, count the pennies and the pounds will take care of themselves. So I think that's where we start. I believe financial behavior starts with what you have on hand, right? If you're making, let's say, 1,000 naira, 1,000 rand, are you taking 10% of that and putting it away for a rainy day? Or are you saying, actually, I've got to spend all of it? So I think it starts more about financial behavior as opposed to getting the money in. That behavior, the more you start accumulating, the easier it's going to become for you to start generating that wealth.
Is it a matter of culture?
I think it is. Often, there are lots of things in the African culture we don't like to discuss. It's very rare that we sit across the table and as a family we discuss what our finances look like. What we're seeing in Europe, that's very, very common. People are more free to discuss how much do I earn? How do I spend my money? What are my financial habits? Am I going to give up, short-term benefits for long-term gain? And we're not having those discussions. And I think it starts there. Financial education for me begins in the home. And I think also as employers, what are we doing to empower some of our employees? We're seeing some trends coming through in South Africa where some of the larger banks are starting to have financial education internally as part of their employee wellness conversations. Seeing some of those trends also come through in countries such as Rwanda as well as Kenya.
What about in Nigeria?
Well, what I love about Nigeria is that everyone loves to make money, right? And I think
what do we do with the money?
That is the challenge. Often we're more focused on appearing wealthy as opposed to creating wealth. So I think we need to start having those conversations as to how do I diversify my wealth. It's often said that the average multimillionaire has 7 revenue streams. And if we're too focused on, let me just get my salary, and then maybe I'll start a shop and that'll sort of counter some of my losses there, and all of a sudden it's like, that should be fine, but it's not. If we're going to create generational wealth, we need to be looking at those 7 revenue streams.
Well, I think one thing you said there that hit me is something that I think appears obvious in Nigeria. People who like to appear wealthy, meanwhile, they may not be really that wealthy. So how do we counter that mindset, to try to say, just be yourself. You don't have to appear wealthy. You should be wealthier than you appear.
I think it's very, very difficult, right? Because as one of my clients once said to me in a coaching session, Coach, I can't wear my title deed. So I can't necessarily show everyone how wealthy I am from an asset perspective, but how I appear, they can automatically tell. And often there's the mentality in African society that wealth begets wealth. So the appearance of wealth, then we then assume will beget wealth. And I think for me, as opposed to worrying just about assets that you put on, what does your balance sheet look like? So if we're looking at your land and buildings, we're looking at businesses you've invested in, we're looking at some of your equity, does that reflect how you dress? And if not, I think that's an internal conversation you need to have with yourself, because often it's also a little bit of a values thing, right? It's a perception thing. How do I want to be perceived and how do I want to be addressed when it comes to my wealth?
But what's the continent missing if we don't change this culture or perspective? What do we lose?
I think we will continue to have, as you know, we've got soon to be the largest population in the world, right?
Yes.
We're going to be more Africans in Africa than we've got Indians in India or Chinese in China. So if we don't start really focusing on how do we create generational wealth from a ground perspective, we will find ourselves always having to work for that next paycheck. In South Africa, we've got some shocking statistics coming through. The average South African is 1.8 months paycheck away from bankruptcy.
All right. Well, since we have a lot to learn, and to practice. Thank you so much, Bimile Msweli. Thank you for your time and for the lessons you shared with us this afternoon. And just before we go, she's from South Africa. So let's get to South Africa and see the annual consumer price index has dropped slightly to 7.6% for August from a 13-year high of 7.8% in July. And data released by Stats SA shows the biggest contributor to the lower annual consumer price index was the lower fuel prices. Fuel prices decreased by 3.8% in the last 2 months, with petrol falling by 5%, while diesel dropped by 0.9%. This, in turn, had an impact on the overall transport index. And Stats SA, however, says that food inflation continued upward. So it's a mixed bag there. But that's it for Business Incorporated, ending there in South Africa. See where we'll pick it up tomorrow at 1:30. But I'll see you at 10 a.m. first for Business Morning, where we'll have relevant and current business conversations. I'm Ini John McQuarrie. Enjoy the rest of your day.